Kicked off the week pretty strong. Guess we need to put some information in our description here of everything that happened, since it's been pretty busy. Don't know how the day is going to end up, but we'll figure it out here shortly. Looks like we had four buys. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 sells. Sold 12 today. So these small accounts are easy to keep up with. Just bear with me while I put all of these in here. WSM sold. We'll go down through the list here, show people. There was one here today. I think it was RPM that was bought this morning, sold a couple hours later. And Heister, HY, was another one. You know, keep in mind, these are small accounts. So the scale is, they've been scaled down to you know, protect capital. You don't you keep going all in on these where people make mistakes like, well, hell, if you're that good at picking them, why not just put 100 shares in? It's like, well, I mean, some days you get some good ones and some days you don't. If it goes against you, what are you going to do? You know, instead, I'd rather have all these little winners and never take a loss than to have to put stop losses in. This is just my way of doing things. You can learn from it, and you can do it your own way. And it makes no difference to me, but I'm trying to show people how to, you know, do it without blowing up their accounts and stay in this for the long term. You don't even have to do this every day. I mean, you can do it on a week-to-week basis. That's how simple this is. I think, yeah, 276 days without a loss. It's pretty impressive. It's not the longest one we've had, but we'll go down through here. We'll look at, let's see, all the ones that was a start off up here. Which ones? There's one here. No, right here, SSB. It's one that closed out. Let's look at some of the, down through here a little more. There's DOV, there's one on the list. Let's see, SON, Sunoco, RPM. Okay, and because it's still on the scan, we're going after it again, just at a lower value. You got Heister. Same thing there. It's still on the scan, so we'll utilize it. Altria, MO. Pretty common one to come up on scans. That looks like about it. We'll go down through here and see everything's still climbing. We still got a little ways to go to break even on there. You can see up top the $12 mark, or about $2.64 away. You just let that go. I'm not willing to put in a order yet. Let's see, where are we at? DBL. Looks like DBL. Looks like it might close out a smaller order to get us under that threshold of the max shares. AEP. Yeah, not much going on there. A lot of stuff positive. IDA, McGee, Lockheed Martin. If you're having trouble in your accounts where you're constantly taking losses because you're, you know, following some guideline that you read online, you know, it's one thing to protect a large position with a stop order so you don't wipe yourself out. But when you have small positions, the point is, if you're buying into companies that are paying dividends, we assume that these companies are making money. So why else would you invest in them? See, I don't invest in any companies that don't produce a dividend because they're putting the money back into the company. And that's fine. You know, if you want to go with a growth company, that's fine. But if you bought Apple, give you an idea of what I'm talking about. You know, if you just happen to buy Apple right there at the, let's say the 140 mark, right? And you bought 100 shares, so you got 14 grand in there. Or right now you're down $3,000. Did you have a stop in there? Because here versus here, right? So with my method, maybe we bought, you know, let's say 2 shares, right? And then you bought another 2 shares, and then you bought another 2 shares. So you dollar cost averaged, and then you're down to even at this level here. It doesn't have to come back up that much further. But look, you got to wait all these weeks for this to come back up. Most people think this is going to happen overnight or something. It doesn't. This is why you have to be patient. You know, you can get yourself into trouble. You know, fast moving markets. Yeah, I mean, this sucker could just drop out. It could go shooting right back up. I have no clue. But it does pay dividends. It's just not enough, right? What's 20.205 by 4? Doesn't meet our threshold, right? It's got to get up to $1.20. So it never comes up on our scans. I mean, it's something, right? But it's just not enough. So yeah, we look down through here, got a lot of positive stuff going on today. So it is what it is. I mean, I can't tell you where the market's going. Nobody knows. So all we concentrate on is targeting those dividend amounts. You can see you got a few weak ones, Pepsi, BLD, and who knows why they do what they do. I don't care. It's either they're going to sit in that portfolio, and this is what I'll make per year. Looks like I've got 1 share for this one, $3.28 on the year, right? And they're like, well, how can you make any money like that? And I said, well, you need to look at how many stocks are in each one of these portfolios. And then if we made 51.78, I don't know what the average is per day, because it's, you know, you're at the mercy of the market. So I let the market come to me. It's basically, once you get out of the 100,000 range, you'll start to see, you know, you're going to be doubling because you're using 20% of your max shares. So you're going to continue to, you know, increase your amount of profit. Dividends are twice as much. So instead of having, say, 1 share of VRTS, now you're going to have 2. Right? So now you'd have 500 invested, so you'd be getting $6.56 back. But you have to look at how many times. Like, we'd have to go back into this particular portfolio and look and see how many times VRTS was traded during the year. So let's just say, let's take a look and see VRTS. VRTS is paying 1.3%. Well, if we traded that, let's say 10 times, then what do we make? We made 13%. A lot of people scoff at this, and it's beyond me. I mean, I don't know what they're teaching people in school these days, but 13% on one. And if you can do that on multiple accounts, it really starts adding up quick. But yet, people want to go out there and blow $100. Say, well, I'm just going to put $100 stop in there. You know, more times than not, they take you out. This system here, we don't take losses, and that's, therefore, you can look and see 276 days without a loss. Just because we're in and out, we take profits. In and out meaning, you know, there's always something coming off the table. Now, there's going to be a day come when this market is just in free fall. It's going to drop. If it ever does, I don't know. I mean, they could keep printing money. Who knows? There could be a war, massive I don't know, environmental problem. Who knows? Anything can bring the market down. The deal is, though, if you're in dividend paying stocks, yeah, you won't be selling anything, right? Because everything's coming down. But you're going to be collecting those dividends, right? So this is what you got to keep in your head. Always want to have some cash on the sidelines, so that you can buy in. Like these particular accounts are very small. And the larger accounts, it's easier to show somebody how to do it, 10%, but people don't. It's funny. I get people ask me questions like, how can you make any money when you're only bringing in, $5 a trade? And I said, well, why don't you ask the brokerage firms the same thing? They got it. At one time they were charging $7 on each side of the trade. Now it's nothing, right? But if you're trading options, you're probably paying $2 per side at a minimum, then regulatory fees and all the other stuff. So you ask me, how can you make any money doing that? And it's like, well, it's a numbers game. Number of occurrences. They realize that the more people that trade and the more times that they trade, the more money they make. So they're making millions of dollars per month. You need to learn from that example. Don't be crazy and be like, hey, I think I can, put $10,000 in the market and turn it into $100,000 by, this same time next year. I say, if you could do that, it's, I'm not saying you can't do it, but show me somebody that's done it. I mean, I've been doing this for 30 years, over 30 years. And all these accounts that I manage have one thing in common. They don't lose money. They just continue to grow. So these little ones here, I mean, I can't tell you, but I can guesstimate a $70,000 account. If this is earning the total amount in the account right now, the cost basis is $68,156. If we multiply that by this value over here, this is the average percentage yield, right? Times 8.93%. This account, if we do no trading, just stop right now, don't trade it at all, we'll make, just say $6,100. So if you do any trading at all you're going to do is improve this number. I mean, you can vary it anywhere from 15 to 20, 22, 23%. Just depends on the size of the trades and the things that came in. As long as you stick to a plan, stick to your rules, and make common sense decisions. If you get that FOMO, or you want to play that YOLO, I promise you, you're going to lose your money. Well, we got about 18 minutes left, so let's go down through. Let's go to all. I don't know what account that was on. Let's take a look. There it is. All. So you can see they all have the same thing in common, right? They sold higher. They didn't sell low, right? And they didn't sell at a loss. Sell at a profit. Everything's a profit. So if you get, 3,000, divide that by $2 average per trade, which, this one was 3. And then this another 3, another 2. These are all low yielding stocks because they're high dollar. So if you're investing, you don't want your whole portfolio full of 1% stocks. This is diversification. Okay, diversification. Diversification, the names of the companies, what they do. But yeah, there's not a heck of a lot going on this afternoon. They basically ran that thing up as hard and as fast as they could, which helped us, you know. I don't disagree with it. But you have to be in to be able to take advantage of those situations. It's too late once the move actually happens. Like, I mean, if you jumped in right now, you're late. I mean, I've been in this position for quite some time, you can tell. So being in the market is the key. Sitting on the sidelines with your cash in your hand, it's just, it's not smart. I mean, you got people that are, you know, futures trader, they're in and out. They're 50-50, you know. If they get that one run, you know, I guess every couple months maybe you make it. But it's got to move a lot for you to pick up, you know, to get away from the losses. But that's how some people think. And that's fine. There's all kinds. I'm just trying to show people a better way, a little easier way. If you're the type that, you know, has a job during the day and you don't have time to be looking at these screens all the time, this is a perfect way to do it. My better half, she looks at it maybe once, twice a week. She just puts her orders in, you know, alert comes up. She puts her order in for her sell. She goes about better business. It's an emotionless trading system. You don't have to think. You just collect your dividends, right? It's kind of like if you had $1 million and you said, oh, I'm just going to buy some Coke. Well, $1 million will buy you what, 200,000 or 20,000 shares? At 3%, you'll probably make 30,000. If you're fine with that, I mean, there's nothing wrong with that. It's just, I would rather be a little bit more diversified than just being in one. You know, if you're Warren Buffett, you know, you buy, I don't know what's he got, 400 million shares. He makes $150 million a quarter. I mean, you got to be realistic with the type of money that you have and where you want to go with it. If you're smart with it, you learn the system. If you learn how to grow the number of occurrences, the number of times you sell something and the number of times that you can get a dividend from a company, that's how it grows. I mean, if you had enough money, you could buy every dividend paying stock that was in the NYSE, the NASDAQ, you know, I don't know what that would come to. Somebody would probably have that number. But you wouldn't really have to do anything. You'd be like the most diversified person out there. Now, you didn't have to trade it. You could just sit on it. Didn't matter what the price was when you bought it. It just doesn't matter. If you bought it at $100 and just said, I'm never selling it. I'm just pulling in the dividends. If all of it came up to 5% per year and you had $1 million invested in all of those stocks, you'd make $50,000 a year. It's just a numbers game. We're not even talking about trading. People can't see the power of the numbers because they start with a small amount and they're told that they can do great things with $5,000. And maybe you can under the right circumstances, but being realistic, if you could get 10% on your money and make 500 for the year, you're that much further ahead, and you could go and continue to work, get your money together. Everybody wants to be a full-time trader. It's not in the cards for everybody. I mean, if you can live off $500 for a full year, yeah, you'll just have $5,000 making you $500 at 10%. So you've got to be able to get it to grow. So you can do that through trading as well. And it's perfect opportunity for people, especially with you know, zero fees on trades. But you got to understand, you got to keep growing that account. That's how you're going to get into those upper levels. I'm trying to show people how to do it with a small account, like 20,000. I think one of these accounts is only $20,000. Yeah, I think it's this other one, right? That's 17. I mean, the market value is 27 because there is cash there as well. But right now the account's making 6.38% on 17,642. It's not making it on the 27,170. As long as people understand it's on the cost basis, because that's what you have invested. The other's just cash, right? It's not making anything until you put it in there, but we use that so we can get in and out, right? So, well, would you rather have another $10,000 making you 6%? I said, well, that's just another $600. I can make $600 in trades, right? If you're making $50 a day on trading, or even $20 a day, that's $100 a week. You're going to surpass the dividend amount if you stay small and you try to hit the number of occurrences. Where everybody wants that quick fix. The quick fix is people's downfall. Same thing as drugs. If you like that fix, you'll be a slave to that drug. And you can say in a lot of cases, there's a lot of people that treat trading, and it's an addiction. It becomes a gambling problem because that's what they do. They gamble. They throw their money in the market and they hope for the best. They roll the dice. But I worked too hard over the years to get where I'm at. Now I'm trying to impart some, valuable information on people, and you take it for what it is. I mean, I'm sure everybody's an adult and they can figure it out, but once you actually start seeing the power of numbers and the power of dividends, I mean, Warren Buffett started off with what, $1,000, and I guess a bunch of friends and his family and stuff got together like $100,000. Look where he is now. I mean, everybody said, well, he just got lucky. Well, you can call it whatever you want. We don't know. I don't know. But he made some damn good decisions. That's all I know. He never has to worry about money again, does he? I'm never going to be a billionaire. I mean, not unless I inherit it or whatever, but I can live comfortably off dividends. When you get ready for retirement, look, if you're in your 20s and you're watching this, if you take this information that I'm giving and you stick to it, let me tell you, you'll be a millionaire when you get ready to retire. I can't guarantee it because I don't know your lifestyle and I don't know how you manage money, but just getting the idea down, stop worrying about, trying to hit that one home run. That's not going to, I mean, it can happen. Everybody can win a lottery ticket, right? The chances are really slim. Think about number of occurrences and standard deviation. Look into these type of things that make a difference in your trading. When the light bulb finally goes off, you'll be surprised at how easy this is to do. But I guess it's because it's so easy to do that most people just, I don't know. I mean, when I was younger, yeah, I tried just about everything, but I realized real quick, I didn't like losing money. So, and this is how I came to this point and came up with a system that people can benefit from. But it's just fun. I like working with numbers. I'm an engineer. I reversed engineered this from basically looking at portfolios of some of the most successful dividend investors and stock portfolio analysts in the world. This is what I came up with. I scaled everything down. If you want to put 3 digits behind that value. Where is it? Okay, put 3 digits behind here. Now you got $68 million. Yeah, $68 million. I've scaled it down for you to show you the power. Once you see it, and once you figure it out, you actually start trading it this way. You'll never do it any other way. I'm not saying you can't, put money into some thing like Tesla that's new on the market or whatever, put a small amount into it, see what happens. Little lottery ticket here and there, but you don't put $5,000 on something and hope for the best. That's just, I see so many people lose their butts, and they're just, it's that hopium running around. I hope I get it, I hope I get it, I hope I get it. You have to take profits. But yeah, it ended up being a decent busy morning. I'm sure there'll be some more sells tomorrow. Looks like that sucker came up within what, 23 cents? Yeah. Yeah. It's cyclical. You take advantage of that cyclicality that's in the market, and it works in your favor. But you can only do this if you scale it down. It's amazing stuff. I wish I had learned it 20 years ago. When I figured it out, probably 5 or 6 years ago, everything changed. So, managed quite a few accounts now. I put these small ones up here because once you get into the bigger numbers, I mean, you just go back and forth, and it's easier to teach people with the smaller amounts, and then they understand when you go to a larger amount because you're just scaling up. But yeah, I don't really see too much else going on today. I think, like I say, people are taking profits now. What's the market down to now? No, I'm looking at Bitcoin. Yeah, market backed up to the 377 mark. That's the Dow. S&Ps are negative. Doesn't matter to me though. It's going to do what it's going to do. Don't care. If I don't get the trades, I get the dividends. If I don't get the dividends, I get the trades. The market sits still, I get the dividends. The market goes down, I get the dividends. There's no way to lose. Now, you can lose. One of these companies can go out of business. Something happened. Major lawsuit. Boom, they're gone. And a lot of people are jumping in here at the top, right? Because hey, we want it to go higher. I mean, you see it all the time. I'm actually putting together a video. I'm going to finish it off tonight. A little PowerPoint presentation. It's pretty good. And it's the most common thing I see, emotional trading. It's probably one of the biggest downfalls for all people. And a lot of people like, oh, the stock market's just crooked. And no, it's all in your head. I said, it's very efficient. Money is traded left and right at one time or another. I mean, I'm not saying it's, perfect. I mean, there is a lot of manipulation, but you can take advantage of that manipulation as well by not worrying about it. Don't let people tell you what to invest in. Pick your own stuff. Or you can follow somebody's trades and see what happens. But ideally, this is just a numbers game. It's just a different acronym for making your dividend. Who cares? As long as they're paying a dividend, what difference does it make who the company is or the fund? As long as it's paying me, they want to use my money. Well, you got to pay me something. I'm not giving my money to Apple. They don't pay me enough to do it. What's the point? Get something back for your money. Everybody wants to be involved in these penny stocks. Why? Because you have $5,000. Say, yeah, I can buy 20,000 shares of that. It's like, yep, you can. They can disappear just like that. Nobody knows what the high is. Nobody knows what the low is. People will sit there and tell you all day long what to do, and nobody's willing to put in the time. All right, we're coming down to the end. Decent day. And we'll see what the future brings. Have a good night, and we'll see you in the morning.